Welcome to Market Talk. Today is April 1st, 2025, and I am Jeff Hedley with the Hedley Hoeger Group and Managing Director with Robert W. Baird. The first quarter has ended, and we have had probably one of the most interesting quarters of my 33-year career. What we had expected going into this year has been completely turned upside down, and we are now starting to see generational changes in the financial markets as well as the realigning of the geopolitical landscape. Before we get into that, let's look at the market scoreboard for the first quarter. The Bloomberg US Ag Bond Index was up by 2.78%. The Dow Jones was down by 0.87%. The S&P 500 was down by 4.2%. The Nasdaq was down by 10.2%. The Europe, Australia, Far East Index was up by 7%. And the S&P Asia 50 was up by 7.33%. Coming into 2025, we expected the animal spirits of Wall Street to be unleashed as the new administration was expected to focus on bringing prices down, deregulation, and a more favorable business environment. Instead, what we have had so far is a lack of clarity in trade with tariffs, skirmishes with traditional allies, and the inability of corporate America to adequately plan for their businesses. As a good friend of mine, Mike Antonelli, likes to say, markets can thrive in uncertainty. It's surprises they don't like, and we have had many of those this quarter. I think this is evident in the difference between the world stock market's performance and the US in the first quarter. While we would have thought that the policies being discussed would be hurting the world's markets, quite the opposite has happened. They have thrived over the last quarter versus the US. While it's still too early to speculate what the final tariffs will look like and the retaliatory tariffs that will come, it is safe to say that they are weighing on consumers' minds and businesses alike. We continue to see weakness in the soft data points we follow weekly and are watching very closely to see if they show up in the quarter's end hard data. There is a strong possibility that we could see a year where all returns are back end loaded as clarity in tariffs and tax policies crystallize in the later half of the year. One thing we are seeing, though, are seismic shifts happening globally in response to the changing policies of Washington and the global order financially and politically. In March, we saw a historic vote in Germany that cleared the way for over 1 trillion euros of spending on defense as well as infrastructure, and a 500 billion euro fund is being finalized to establish a common defense spending in the Eurozone. We are also seeing discussions of dropping inter-country regulation, tax reform, and suspending budgetary restrictions to allow for increased defense spending throughout the Eurozone. All of this has led to their markets outperforming ours and have left us questioning whether this will lead to continued outperformance against the US. We also are seeing strength come out of China as they start to ramp up government stimulus for their markets as well. We are monitoring very closely the flow of international capital, which could have profound changes as to where the best performance and markets come from. Clearly, there have been momentous shifts this quarter, and April will bring no slowdown in this. It is important to note that while month to month can bring rapid changes, we continue to look at data that will signal longer strategic changes in the direction of both bond and stock markets, which is what we favor when making shifts to our portfolios. Volatility, especially when it is rapid, is also a good reminder as to why we favor longer-term approaches to overall investment strategies. As always, please reach out to Ben and myself with any questions or concerns, and I look forward to our next update in May.